Good morning, traders. I'm Adam Harris, and this is your opening bell. So today is Wednesday, the 22nd of February, and really just having a look at the major earnings news, major economic Canada news for today. There's really, my focus is going to be on the FOMC this evening. It'll be 7 to 7:30 p.m. more or less UK time. I mention that because the markets start reacting to it at about 7 o'clock, even if some of the most hawkish or dovish statements are given out at 7:30. So that's really what the market's going to be watching for. Want some feedback as to whether it should be concerned. You've got to think of the market as an animal. It's just looking and paying attention for anything that it needs to be worried about. Specifically right now is fears of inflation. Now, the data really points to that calming down. However, when I have a look at the market, so let me just kind of go through what's expected in terms of earnings and dividends. So earnings today, there's a long list, but let's just go through them. You'll be familiar with most of the names. Is in Nvidia, graphics, Rio Tinto. We've got MoneyGram, Fiverr International, so Fiverr do tasks, services. We've got Getty, Getty Images, Wix.com websites. We've got Qantas Airways, Qantas Airways, Churchill Downs, Etsy, of course, Etsy where you sell homemade products, and then eBay as well. So then in terms of dividends, is really only Thomson Reuters that is worthwhile mentioning in that list. And that's pretty much it. There's no other IPOs or splits worth mentioning. And then if we go across and have a look at the markets, one of the things that I observed yesterday was a big bump up in the VIX, which is the volatility index. It's still relatively low on the scale, so it's not really at DEFCON 1 yet, it's at DEFCON 5, which I find interesting. I also see that equities took a hit yesterday. We spoke about this yesterday. It was a potential for that dollar to come out strong, but actually what happened was the dollar came out a little bit, but actually equities took a bigger hit than expected, pretty much across the board. So that is interesting because the implication there is that we're possibly going to see a follow through of that today. So, and that does mean that we're starting to look towards potentially finishing the week much lower. We'll see how that goes. Let's just deal with today for now. But yes, so my expectation is to see the markets potentially continue down, unless they're all sitting at support levels, at which point they'll test that support level. But the markets did actually move significantly lower. I also saw some of that dollar strength play through with the weaker euro. The pound actually pushed back, so we saw a stronger pound yesterday that performed relatively well. Dollar yen is still creeping up to the upside. Dollar CAD also pushing back up to the upside. Gold is trying to form a bit of a base where it is right now, so we'll see if that is. It's a really sweet spot for it to turn around. It's close to 1800. It's really good. We've been waiting for that correction for a while. So my question today is, do we finish higher up? If we break the high of yesterday, that's a really good sign. That could be a sign that we're going to see gold resume its general trend to the upside. Crude oil is not offering much clarity at this time. Again, it's still stuck in range-bound price action within a bull channel. Okay, and then we have what else was worthwhile mentioning. So the indices generally around the world, the US indices took the biggest drop to the downside. Most of the others, non-US indices, took smaller moves lower. Equities, individual equities from Apple all the way through to Vanguard on my list, including Tesla, including Nvidia as well. All of those had moves lower. Some of them significant, some not so significant. What I find interesting as well, what I want to keep an eye on is bonds. So I was looking at the 10-year T-note. I'm looking at the Euro bond as well. Generally in times of economic stress, you can find that bonds can climb. It is a possibility, and they sort of slowed down. I was looking for them. They're very bearish. I'm looking to see if they slow down and start to head a little bit higher. And actually yesterday they did kind of do that, but that's not enough data to draw any significant conclusions just yet. And then finally, cryptos, as I said, they're tied at the hips, joined at the hips with equities. So if equities, especially tech stocks, take a hit, so are cryptos. So cryptos were struggling yesterday as well. And so for today, I think it's going to be a little bit more of the same. Pretty much that. There's no signs of any reasons why they would change. And so I would be very cautious this day. For day traders, they'll potentially be looking for shorts, especially when that US session opens. If we finish higher today, so in other words, if there's a rebound from yesterday, if it does a reversal, that's a good sign. But generally the markets are a bit twitchy and a bit choppy. And also I want to finish up on this. This is really worthwhile paying attention to. When I look at a chart, for example, the S&P, and I look on the monthly charts and I look at the last 6 months combined, there's a very interesting behavior that I haven't seen going back all the way to 1997. So absolutely, we are in a year of uncertainty, is the best way to put it. Putin's not helping, obviously, with all his speeches yesterday, and the day before, his actions, but so there's definitely uncertainty going on. So this is absolutely a time when traders are more cautious, taking profits sooner, potentially reducing the risk of not even engaging in certain markets where there isn't much clarity. But that being said, there should still be opportunities across the board today. All right, have a good one, and we will see you tomorrow.